the whole world of digital finance, it moves so fast, right?
Yeah.
But sometimes there are these foundational shifts happening just under the surface.
Yeah, absolutely. And today we're looking at one of those potential shifts.
We're diving into something called the Genius Act. It's proposed legislation, but it could have some really big implications, especially for things like stablecoins and maybe closer to home for many of you, credit unions.
That's the focus. And we're using an article by Frank Mazza, What the Genius Act Means for Stablecoins and Credit Unions, as our guide here.
Right. And there are a couple of visuals with it, too. One showing the U.S. Capitol with CU on it, kind of placing credit unions right in the picture.
And another one showing, logos of financial players, tech vendors, even mentioning metal blockchain. Gives you a sense of the ecosystem involved.
Definitely. Okay, before we get too deep, maybe a quick refresher on stablecoins, just to make sure everyone's with us.
Good idea. So essentially, stablecoins are digital tokens. The key thing is they're designed to hold a stable value. Usually they do this by being backed one-to-one by a traditional currency like the US dollar.
So kind of like a digital dollar, but aiming to stay worth a dollar.
Exactly. That's the core idea.
Okay. So our mission today then is to unpack what this Genius Act is really about, its main parts, and figure out why it matters. Why should you, our listener, maybe care about this, especially if you're a credit union member or just curious about where finance is heading?
Right. So what's actually in this act? What would it require?
Yeah, let's get into the nuts and bolts.
Okay. So if the Genius Act passes, it sets up a whole regulatory framework for stablecoin issuers. First big thing. Reserves.
Reserves, okay.
Issuers would have to hold reserves equal to the value of all the stable coins they've put out there. And crucially, these reserves need to be in really safe, highly liquid assets. Think U.S. Treasury bills, things like that.
So for every digital coin, there's a real, safe dollar or equivalent sitting somewhere verifiable. That makes sense for stability, yeah.
It does. That's the intent. Second, these issuers would need to register, either with federal regulators or state ones, basically bringing them into the existing financial oversight system.
Okay, so no more operating completely outside the usual banking rules.
Pretty much. And tied to that, mandatory audits, regular ones, and public disclosures about their reserves and how they operate, trying to bring more transparency.
Right, transparency. Always a good theme in finance. What else?
Well, big ones. Compliance with Know Your Customer, KYC, and anti-money laundering, AML standards. That's all about preventing illicit use.
Standard financial crime stuff.
Okay.
Yep.
And then a couple of interesting prohibitions. One, no paying yield or interest directly on the stable coins themselves.
Huh. Okay. No interest-bearing stable coins under this act.
Correct. And another really notable one, restrictions to prevent the big tech companies, think Google, Apple, those kinds of players, from becoming stablecoin issuers themselves.
Wow, okay. So keeping big tech out of the stablecoin issuance game, at least directly.
Seems to be the idea. And finally, there are some ethical conduct rules for public officials involved in this space.
Got it. That's quite a list. It really feels like a move to formalize things, to bring stablecoins into the mainstream financial system.
Exactly. As the article puts it, this isn't just theory anymore. It's a real signal that regulated, asset-backed digital money is entering the financial mainstream.
Okay, so it's happening, or at least moving that way. Why should credit unions specifically be tuning in? And by extension, why should you, listening, care about what your credit union might do?
Yeah, that's the key connection, isn't it? Stablecoins fundamentally have some potential utility. Think about faster settlements for transactions.
Faster money movement, always good.
Potentially lower transaction costs, too. And this idea of programmable features. These things are relevant for payments, sending money overseas, remittances, just basic transfers. Stuff that impacts how you manage your money every day.
Faster, cheaper, maybe even smarter money. Sounds appealing. So how does the Genius Act connect credit unions to that potential?
Well, here's the interesting part. The act could actually enable non-bank institutions and community-based ones like credit unions to get involved in this regulated stablecoin world.
Enable them how?
Two main ways, potentially. They might actually be able to issue their own regulated stablecoins. Imagine a credit union dollar.
Oh.
Or maybe more likely for many, they could integrate existing compliant stablecoins into the services they already offer you.
So I might be able to use stablecoins through my credit union's app, or maybe they offer their own branded one.
That's the sort of possibility this opens up. And think about the advantages for the credit union, which could flow down to you as a member.
Like what?
Well, offering real-time payments, maybe without needing the traditional, sometimes slower or pricier payment networks.
Right. Sending money instantly would be huge for a lot of people.
Absolutely. It could also help them engage members more, especially younger folks who are comfortable with digital tech. It could boost loyalty.
Keep members sticky by offering modern tools.
Exactly. And maybe even open up new compliant ways for them to generate revenue, which ultimately helps the credit union stay strong and serve its members better.
Okay, that sounds like a real opportunity. But the article cautions that participation won't come without prerequisites. What kind of groundwork needs to be laid? What's the catch?
Right, it's not just flicking a switch. There's significant infrastructure needed. Whether they issue or just integrate stablecoins, credit unions need the tech backbone.
Tech backbone like what?
Things like verifiable digital identity systems. You need to know who's doing what securely. Access controls are key for compliance and security.
So secure logins, verifying users,
Yeah.
standard but critical stuff.
Critical, yes. Also, immutable audit trails. That means a tamper-proof, transparent record of every transaction, essential for regulators and trust.
Makes sense, like a permanent digital ledger.
Kind of, yeah. Then you need the actual tech for issuing the tokens, if they go that route, and building the compliance rules right into the system. Logic built in.
So the rules are enforced automatically by the tech.
Ideally. And maybe the biggest piece, seamless integration with their existing core banking systems. They need to see everything, your traditional accounts and any digital asset activity, all in one place.
Yeah, you can't have two separate, disconnected systems. That sounds complex.
It is. It's a significant undertaking. And the article brings up a technology that might fit the bill here. Private blockchain environments, sometimes called private subnets.
Private blockchains, how does that help?
Well, unlike public blockchains like Bitcoin or Ethereum, where everything is open, a private one allows the institution, like a credit union, to control who participates and what they can see.
Ah, so they can meet regulatory needs for privacy and control.
Precisely. They can customize permissions, keep sensitive member data protected, while still getting the benefits of blockchain, like security and audit trails. The author, Frank Mazza, apparently has written more about this and sees it as a key piece.
It's like having a secure, members-only digital highway built with blockchain tech.
That's a decent analogy, yeah.
And we're seeing signs that this infrastructure is actually being built, right? That second image we mentioned.
Yes, it shows logos like Clover, Temenos, Fiserv, established financial tech vendors under vendors and integrations. They're clearly working on solutions.
And it also showed actual credit unions, like Directions Credit Union and Meritrust Credit Union, listed as banking partners and program members. So some are already involved.
Right. And that mention of Metal blockchain as a layer 0 solution built with BSA compliance, digital identity, and private subnet architecture, it directly speaks to building this kind of compliant infrastructure.
Okay, so the tech is developing. What about the law itself? Where does the Genius Act stand now as opposed to passing?
Well, it's made progress, but it's not law yet. The article notes it passed the Senate with a pretty strong bipartisan vote, 66-32. That's significant.
Bipartisan support, okay. That usually means something has legs.
It often does, but it still needs to go through the House of Representatives, and apparently there's a different stablecoin bill being considered over there, so still hurdles to clear.
So Senate said yes, House needs to debate it, potentially reconciling different versions, the usual DC process.
Exactly. But that Senate vote is a pretty clear signal, isn't it? It suggests some kind of federal stablecoin regulation is likely coming down the pike.
Seems that way. So given this momentum, what's the takeaway for credit unions? The article mentions their history of innovation with integrity.
Yeah, I think that's a really important point. Credit unions often pride themselves on adopting technology responsibly, focusing on member benefit and trust.
Right. They're not always the first movers, but they try to be thoughtful movers.
Exactly. And that history puts them in a good position, potentially, to influence how these digital assets are adopted by trusted financial institutions. They can be a voice for responsible innovation.
So the advice isn't just to wait and see.
No, the article really emphasizes being proactive. Start asking the hard questions now. What would this look like? What partners or tech would we need? Start identifying those compliant infrastructure solutions before the final rules are set.
Get ahead of the curve, or at least on it.
Yeah. The author wraps up by saying, the future of money is becoming programmable. It's a big statement. And the question posed is, will the institutions in your community, like your credit union, be leading that charge or playing catch up?
A really critical question for them and ultimately for their members, for you. Okay, let's try to boil this down. The Genius Act looks like a serious move towards regulating stablecoins federally. And this could open doors for credit unions to offer new digital financial services, things that might be faster, cheaper, more integrated for you.
That's the potential upside, definitely. So even if stablecoins feel abstract to you today, the way your local credit union operates could change because of developments like this. It's worth paying attention to.
Absolutely. Which brings us to our final thought for you, the listener, to chew on. We saw strong bipartisan support in the Senate for this kind of regulation. So think about this. What might be the long-term impact of federally regulated digital dollars on banking as we know it? And what about financial inclusion in your own community? What questions should you maybe start asking your credit union or your bank about how they're preparing for this programmable future of money?